Welcome to the CFI Annual Economic Review. This presentation is being recorded on Friday, December the 13th of 2024. And with a couple of weeks left before year end, some of the data outlined in this presentation could very well change. As we've seen in years past, it's not impossible to see sudden and drastic changes in the final days of any calendar year. So keep that in mind as we run through the data here. Heading into 2024, there were many expectations for an eventful year, certainly, and the surprises that came our way did not disappoint. So let's just jump right into it. Kicking it off with the presidential election, Donald J. Trump comes in as the winner as the 47th president of the United States, with many voters citing economic concerns as one of the top reasons for their candidate of choice this go-around. Being fed up with unaffordable housing and a higher cost of living in general, Americans headed to the polls with the hopes that Trump will improve their standard of living. Political consultant James Carville once said, "It's the economy, stupid," and this is proven to be true once again. Bringing some relief to the gas pump in 2024, we saw a decrease in oil prices. Today, Brent crude prices sit at about $74.38 per barrel, down from $83 per barrel in 2023, with a year-to-date total return of negative 3.45%. With war waging in many oil-producing areas of the world, it may come as a surprise to many that prices have yet to spike. The cost of housing has increased this year. Not only is the median home price up about 2% year over year, with the median price sitting at about $420,000 as compared to $412,000 in 2023. At the same time, mortgage rates remain stubbornly high. The average 30-year mortgage sits at about 6.7% as of this recording. We saw a downshift in the labor market this year, with the unemployment rate ticking up to 4.2%, up from 3.7% in 2023. Impacted by corporate cost cutting after overhiring and overspending during the pandemic years, many workers have been left scrambling for new jobs in 2024. Cyclical industries like tech took the biggest hit. And as of this recording, initial unemployment claims and continuing claims are still on the rise. Even though the labor market remains relatively tight compared to long-term averages, it appears that stagnation is creeping in. The Federal Reserve's preferred inflation gauge, personal consumption expenditures, or PCE for short, is showing that the disinflation trend continued in 2024. PCE is currently at 2.4% on an annualized basis as compared to 3.3% in 2023. At first glance, this appears to provide some relief, but it does not take away from the fact that prices are still elevated above and beyond the exorbitant price increases that came with the pandemic. Some of the biggest price increases this year came from the items we rely on most, such as housing, food, and healthcare. Cryptocurrency grew in popularity this year. After years of skepticism, 2024 proved to be a shift in the attitude towards digital currency. Despite a few scandals in the market, Bitcoin and Ripple both had major legal wins, helping propel this category to mainstream. The SEC green-lighted Bitcoin ETFs, with a few large firms jumping on the bandwagon, thrusting the value of just one Bitcoin to over $100,000. XRP has also grown in popularity, and a major legal win by its parent Ripple is moving this asset closer to being a legitimate security. The stock market soared in 2024, with major indices hitting new highs. As of this recording, the Dow Jones Industrial Average is up 16.5% year to date, having crossed the 40,000 point mark for the first time ever this past November. The S&P 500 is up 26.7% so far this year, after crossing the 6,000 mark in November. And the tech-heavy NASDAQ is up 32.3% year to date after hitting its milestone just this past Wednesday, December the 11th, when it touched the 20,000 mark for the first time before retreating just slightly. Will these gains continue through 2025? I guess we're just going to have to wait and see. Conversely, and unfortunately, the bond market continued to struggle in 2024. As of this recording, 10-year Treasury yields are up a whopping 13.3% year to date, delivering a huge blow to bond prices. This despite a Fed pivot to lower rates. Additionally, the yield curve has steepened this year and is no longer inverted, with the current 10-year Treasury yield currently sitting at 4.37% and the 2-year Treasury at 4.23%. Which brings us to the next big event of 2024. After 3 years of aggressive tightening, the Federal Reserve finally began its accommodative cycle with a pivot to lower short-term interest rates. This past September, they delivered a whopping 50 basis point rate cut in just one meeting and another 25 basis point cut in November. We are, as of today, waiting on one last decision from the Fed on rates. But regardless of their next move, it is clear that we have officially moved into the next phase of monetary policy. Coming into 2024, many economists, including us, expected economic slowdown or outright contraction for this year. Despite the skepticism from the experts and the brewing macroeconomic weakness, the U.S. economy proved to be resilient this year. Annualized, it appears that U.S. GDP will close out 2024 at 2.8%. Incidentally, this is up slightly from 2023, where U.S. GDP closed out the year at 2.5%. So that's it. That's our 2024 roundup, a surprising year to say the least. We're certainly excited to see what 2025 has in store for all of us. With that, we want to wish you a very, very happy holiday season, an incredible and prosperous and healthy 2025, and we will be catching all of you in the new year.